What? How has trading been for you? Can you guys hear me? Ish.
Yes, I can hear you.
Uh, okay.
Personally, I've not started my life
Oh
due
yeah.
to
You told
my
me.
PC issue.
Yeah.
So I'm
You
trying to fix my system, but I'm just trying to follow the market.
okay. With your phone?
Yes, just trying to use it, but I'm not started trading actually.
All right, but before you were on demo, you've completed all the assignments, right?
Yes.
Okay, so how do you feel?
Like I've not started trading live.
Yeah, okay. Well, trading live is not different, but by the time you eventually start, it's just putting your money where your markup is. Your markup has been playing out. So out of if you give yourself out of 10, how has your markup been playing? Like if you analyze, you know, does like how has it been playing out?
Let me say 7. I'll say 7.
7 is okay. 7 is average actually. You need 9 to be fantastic. But 7 is good. Is good. That's 70%. But then when you are trading live, the remaining 30% is going to come with greed and anxiety and just sadness. So you need to be able to get that markup up to like 9 and let it be that that one that you missed, it's like because you probably entered too early. Do you understand?
Oh,
Yeah. A lot of people will say, oh, you don't lose in the market and all that, but oh, sorry. I mean, loss is inevitable in the market. I don't want us to go with that mindset because if you really know what you're doing, you'll be able to avoid those losses. Um, every single time that I've been losing, I know what the problem is. Um, so you just want to be able to give yourself that edge as much as possible. If it is waiting for your trades to play out, it is better to be missing out trades than to be losing them. You know that once you
mm,
catch it, you're on the right side. It's not good to miss out trade, don't get me wrong, trades, but instead of like losing them, you get what I mean. So you're doing really well. You're actually one of the you know, few people that have gotten all his assignments right in the first try, and it's really nice. I can't wait for your progress. It's just now your psychology and your mental work by yourself. Nobody can actually help you with that. You already have all the tools. Um, you have videos, you have me, you have what you need. You just need to do it. So I'm rooting for you. Gift, how about you?
Thank you.
Yeah, sure, you're welcome.
It's been going well, man. Good evening, man.
Good evening. Did you guys like how was the market last week? It had bit dramatic.
Yes, it was okay. It was okay. I would try trading NFP.
How did that go?
Yeah, it went well, man. The only way it was only one. I was only in one, and that was all. I just took my profit and I left.
What pair was that?
Card, was it? I think USDJ, UJ.
Oh, nice. Okay, NFP too. I traded it, but I was in gold, but I left before the juicy move happened because I was just not emotionally invested. And I was just watching it. I was just watching it go. I know when gold is going, it doesn't wait for no man. Before you blink, it's like 150 pips. Once you blink again, it just won't give you time if you are not as aggressive enough. And I didn't have that aggressive muscle. So it was good. My trading partner, my friend actually had like, he is like a beast in gold. I don't know how he does it. I don't think, we don't trade the same way for some reason. But his gold, like, literally played out. And he told me in the morning, like, oh, gold is going to do this and do that. You guys know I don't really take signals from people, but I was like, this lines up with what I'm also looking at. I'd already missed that buy in the first place, so let's take the continuation. And it was like, hope you got it. I'm like, guy, I just got a little pips out of it, but I watched it. It was a nice play. So yeah, NFP is good, interesting, volatile. News will always push your structure in the right direction. And I'm excited for this season that is coming, actually, because some action is getting in. We are having the Fed already changing their tune from what they've been saying since December to December to February, where they started slowing down on interest rates, right? And that was what caused the dollar to plummet. But right now, the Fed chairman is saying clearly that we are going to have to increase the interest rate at a faster rate. So they are going to have to go more aggressive because inflation is looking like it's not bulging. So that means everything that is quote to DXY, that's the USD, is gonna buy. That's USD, JPY, USD, this, USD, that, it's gonna be bullish. In the long run, I'm talking about, like, interest rates, like, is one of the most dominant indicators, right? And determines the direction. And then everything, inverse to that is going to show, like, your EU, GU, and all of that. That's why we had that. The day he said that thing, everything just collapsed and USD pushed up. But after, NFP, is another strong indicator that caused, commodities to rise and then USD to come down. And then indices, like I mentioned in the group chat, indices too was supposed to push up, but we had a news that is like, I don't think I'm okay. I think it's inside this slide too, about news being one of the factors that there are some news that we don't account for. They are not on the calendar. Like, let's say you have an earthquake in in an area, and all of those things. Excuse me, all of those things about the news about the bank shutting down and all that. So that affected the 30 top stocks and the Nasdaq 100. So anyways, interesting times ahead, a lot of peeps to catch, and I pray we all catch them, including myself, right?
Amen. Like, this is so exciting. Like,
Yeah.
dollar has been so quiet since December. Like, give us that boom boom boom.
You like drama. So here we go, and we already have the template. It's like they are moving in cycles. Like, it's easy for them, and this time we will win. This time we'll get it. Okay, so now let's quickly go over one indicator, because I think we have like 20 minutes left. So we'll go through trade balance today. Last time that we did this, we talked about risk on and risk off. And then we talked about what's it called now? Expansion, right? Do you remember? Who was in that class? We talked about the economic cycle, right? I think Diana was in that class.
Yes, we did.
Okay. All right, so now we are going to talk about trade balance. There are many economic indicators that you see on your Forex Factory or my FX book. I use my FX book and Market Watch most times. I use my FX book majorly just to see how it impacts news. trading fundamentals is like very understanding fundamentals rather, not trading it. We don't trade, we don't place our trades. Exactly what I said with USD pushing up. You know, you have to know your entry, you have to know your major amount. Structure is king, structure will play out. What USD is doing right now is a pullback, and that pullback is strong, right? And it has to go back to support to be able to push up. Do you guys see what's happening? Like, it's just so amazing. Okay, so if you notice, everything is moving into structure, into their resistance.
Can I ask a question, please?
Yeah.
I'm sorry to interject.
No problem.
Well, I guess when we say fundamentals and technicals and we're okay, I think my question is this. Is it that like the market makers, or like in the case of USD, the Fed, they're looking at the XY chart and they're like, okay, when it hits the support, we'll say so. I don't know if that is how it happens, but I was just wondering because sometimes you're like, damn, this is actually at a support level and it was so prompt and it moved from here with this news.
Obviously they have technical analysts, but technical analysis and fundamental analysis are two different types of analysis, but they are so, everything is so, what's the word now, intertwined, even with the housing market, even with your bond, the stock market, everything is correlating, everything works hand in hand. So the job of the Fed is to, like we talked about in the beginning of this fundamental analysis course, is to regulate monetary policy. And we are trading money. We are literally in their terrain. So they can, their decisions affect the market. And the development of technical analysis just happen to flow with that. That's all I'll just say, right? It just happened to flow with that. And that's why, the discovery of Japanese candlesticks and all of these things and understanding how chart moves. Because really, if you look back at the history of Japanese candlesticks, right, they discover like people and emotions react the same way. It is a pattern. When they say something is a pattern, that means the same way it happened before, it will form in this same like wave. You get, like, the pattern keeps happening. So there is nothing that has happened that is happening now that has not happened before in the charts. That's why back testing, is very major. You would always know what's about to happen because it's going in cycles.
Okay, thank you.
Yeah, sure. So let's quickly go over trade balance. Now, what I wanted to say is fundamentals, can tend to be confusing, but it really isn't, because you have to understand it in regards to the pair that you are trading. And you have to know that this economy reacts to this kind of news it reacts to this kind of news more than it reacts to this other indicator. So what is trade balance? Trade balance, or balance of trade, is the difference between the exports of goods and services out of the country and the imports to the country. Importer, exporter. So the difference between that, the trade balance is one of the components of the US balance of payments and also other economies, right? Which gives a valuable insight into and exerts every pressure on the value of the dollar. Because if we're exporting, is bringing in money into the country. If you are importing, you are spending money. Does that make sense?
Yes.
Okay, so the figures measure the net export minus the net import. That's the overall amount that they exported over a given period of time. So it could be like the month or every quarter. I'm not sure how often they bring out that news. I'm sure it's always on our calendars. We are able to see it. So when the news is coming out, it's like over the past few months, this is the trade balance figure. And this has tended to be negative in the US. So now using USD as a chief case study, in recent years, as the US is primarily a consuming nation, much like our dear beloved Nigeria, even though Nigeria also is big on export, but we are very big on import. We are importing toothpick. And we're importing Indomie. We're importing so many things. Anyways, so the US is a consuming nation, right? So import and export of that economy. This is one of the most misunderstood indicators in the US because many people believe that. So there are two things. There are two things called trade deficit and trade surplus. We are going to look at it. They believe that trade deficit is a bad thing. However, whether a trade deficit is a bad thing or not is relative to the business cycle of that economy. So remember we talked about your peak, your recession period, your throw, right? So depending on if we're in a risk on or a risk off environment, how would this figure affect it? So in a recession, the country tends to export more because it's like you're selling, like you need to sell more goods to be able to generate funds, to be able to generate income. You're creating jobs and you're creating demand for your products. And in a strong expansion, countries tend to import more because you have money, you are able to do more. Does that make sense? So you're providing price competition, which limits inflation and all of that. A trade deficit is not a good thing during recession, but it will help during expansion. So what is trade surplus? Did I talk about trade deficit? So trade deficit is opposite of trade surplus. So we're talking about when the export is greater than the import, that is your trade surplus. So let's say the export in the US is, let's just say $1 billion, and the import is $500 million. They are running on trade surplus. So the money in the export, the money, generated from the export is reinvested back into the economy. So when we have money flowing into the economy, that means that money is circulating and the economy is, doing well, which can tend to cause inflation also. Does that make sense? Because we talked about inflation one time, that, when you have so much that is circulating in the economy. So this trade surplus means that there is an increase in trade surplus numbers, means that there is an increase in production activities, so you can hire more people are employed. Consumer confidence number is good, is on the rise. You're increasing in retail sales. Your demand exceeds supply, and then you are beginning to have inflation. Like inflation is peaking. So at that point, you need central bank intervention to be able to, either talk on the interest rate, so you now cut down on how much you're exporting. So okay. An increase in, this is just general, right? An increase in trade balance numbers is bullish for the DXY. A decrease in trade balance numbers is bearish for the DXY. So why do we care? The reason why balance of trade is important to us as currency traders is that the export demand and currency demand is inextricably linked, and foreigners must buy domestic currency to pay for their exports. So the stronger the export is in a given month, the greater the demand, and all that. When there is demand for that currency, we know that it increases. So I wanted to check if I put in JPY as an example. No. So that's it. Exports also impact production and prices at domestic manufacturers. As domestic manufacturers, they strive to meet with the increasing demand by increasing production. So I want to use JPY, for example. This kind of news, when you see trade balance news with JPY, it affects that economy because they are very big on export. So JPY runs on trade surplus. Does that make sense? Meanwhile, the US does trade deficits because they are more of import. Does that make sense? Hope you guys are hearing me.
Yes, ma'am.
Oh, okay, good. So do you have any questions?
No, man. It's just that, well, maybe I've not been attending all the classes. I've not been attending all the classes now. So, but if we want to, like, these things, do we check it before, like, maybe doing NFP or to determine, like,
No.
okay,
Dear Forex traders, NFP is not the only economic indicator news. We have GDP, we have trade balance, we have other things. Do you understand? Like NFP is just, we are still going to talk about NFP. I think I should have listed out all economic indicators. So for example, now this one that I am showing, these are economic indicators. Just like on your technical analysis, on your trading view, you have Bollinger Band, moving average, all of these things. Those are technical indicators. These are economic indicators. Does that make sense? Like these are indicators that the economy is doing good or is heading towards a bad place or is heading towards a good place. So you have durable goods. Durable goods too is an indicator, just like NFP is an indicator. Housing starts, building permits, industrial production capacity, initial job claims, your non-manufacturing index, new home sales, and when Trump was president, his tweets too used to move the market. Not now. The current president is just boring. I'm just saying. But do you get what I mean? Like we have how many indicators? We have a lot of indicators. These are like 7 here. We talked about jobless claims here. I just want to take it step by step. See NFP here, like it's part of the indicators that I've done. So I think next week we'll be talking about NFP, although I've talked about NFP before. It's on YouTube. I'll probably send the video, send the link to that video, but we would do a class on NFP next week, and then we will do interest rates, we'll do inflation, we'll do CPI and all of those things. Look at, we have GDP here. Do you get what I mean? These are indicators that the economy is heading towards a direction. And, we talked about economic cycle. We have done 2 classes on these fundamentals. We talked about economic cycle, the business cycles where we have expansion, peak, and through like expansion, contraction, and then this is it here, you know, recession and all that. This is what the economy goes through. So it's either we are in an expansion, we've reached the peak of that expansion, we are in a recession, we are in a deep depression, like we are recovering, then we go back to the peak and we go back to recession. It's like a cycle. It's like normal. So it depends, where are we now? Is these indicators that are going to be showing the central banks where we are in this cycle? So they in turn will now you know, take decisions that will be able to control that environment. If we are in a peak period, which we were in 2020, end of 2020. Okay, so starting from COVID, right? We were in a throw, definitely in depression because everything shut down. Nothing was happening. So what did they do at that time? They cut interest rates so that the economy is going to go into recovery mode. And in doing that, they started printing money. They printed a lot of money and then we went into peak. When it reached the peak, they now started increasing interest rates. Do you get what I mean? Like they started increasing interest rate, which now, you know, the economy is going down. I mean, the statistics shows that they are in recession. What shows that they're in recession is that when they have two negative GDP numbers, that's what we are going to look at some point. Maybe if we are going to go over it next week, right? That's the gross domestic product. That is like the health of the economy. That's the indicator that shows the health of the economy. So if you have two negatives numbers consecutively, you are already in a recession. So the job of central bank now is to increase interest rates, but not do it so aggressively that the economy enters recession. And we already talked about what recession is. I'm going to re-upload that video on YouTube. I don't think I uploaded it. By the way, I'm putting all of this in a playlist of fundamental analysis so that you can go back and study it again, as well as do further research. So these are just the basics of it. So if we go to Forex Factory, and let me share my chart for Forex Factory, you can see this is what almost like every trader sees. Is this same thing. If Donald Trump is on his private jet and he wants to check, he can come here and check or go to my market watch or wherever wherever I gets his news. The numbers may be a little different, or the time or the, you know, percentages, how they present it, but it's no far off. It's just like different brokers, right? But it's the same time that this news comes out. This one is configured to my Nigerian time. Okay, this is what happened on yesterday. All of these things here, these are the news, right? Can you see BOJ policy rates? That's press conference. Policy rate is the interest rates, then their press conference. See GDP here, the GDP for Great Britain, that's for, you know, UK. Then CAD also have their employment rate. We also have an unemployment rate. You know, so each currency is an economy. They have what they are looking for. So it depends on what is important to that economy. Like the US now, their jobs are important to them. That is why NFP is very, very huge. Like it's the boss of all bosses. But NFP's move is just for Friday and probably residue on Monday. Interest rate is like the general direction. I don't like it. Literally annoys me how much people glorify NFP. Like, well, anyways, it's interesting. Don't get me wrong. It's very interesting and it's volatile, you know. But there are market is the market. Yeah. So you have New Zealand here too. They have their news. these are economic indicators, all of these things. So you might want to go on Forex Factory and just check, just randomly pay attention to like what's all these things. So what I'm teaching you is the meaning of all of these things. So these yellow ones are the ones that have low impact. The red ones have high impact. So consumer sentiment and all of that. I'm looking for trade balance actually. Now we have 8 minutes left. So, okay, here. You can see to GBP, they have their trade balance, you know, is on low impact because, like I said, JPY is more, you know, into all of that. And then the numbers for the trade balance, the previous number was at, I've not really, okay, so Forex Factory, if you click on that folder, it said the difference between, excuse me, the imported and exported goods, actual greater than forecast is good for the economy. So it now depends on you to look at the economy, study the economy of UK that, okay, do they work more on like US that they're a consuming nation? Like, do they export more or do they import more? If they export more, if their number of export is greater, then that's good. But if their import is more, you know, that's not good for the currency. So a positive number indicates that more goods were exported than imported. Do you get? So if UK now, they are into imports, and then they now have more goods that is exported than imported, is that good for the currency or not good for the currency? Can someone answer?
I didn't get that.
If here now, read this. A positive number indicates that more goods were exported than imported. So primarily, if GBP, they are more import oriented, that means the economy thrives more on imports. If they now have a number, like they say a positive number here, if the numbers are now positive, that means that there were more exports that happened than imports. Is that good for the currency?
No.
Exactly. So no matter what the actual or the forecast says, it depends. Do you get what I mean? Like, it just depends
Yes.
on what you are looking at that point in time, what the economy is saying. And sometimes because of what's happening overall, it might not really move the markets. Investors might not be interested because what is doing them is bigger than just this low impact news. Do you get? You already have GDP, you know, of the UK, right? And you want to check the numbers. Now the number is positive. Is actually greater than the forecast. So, you know, you have to do a research and study and read on this economy. You can Google it, GBP economy, you read on it. I actually was about to do a full class on that. I have the slide somewhere, I can't remember. I was doing it, but, you know, I just got caught up in other things because I'm like, maybe people should actually do the work. So if you, whatever you're trading, okay, what is this country all about? Canada now, they are more about exporting oil. So, you know, all this employment, this thing may not really affect them that much, their employment rate and all. But US employment change is huge. That's why you have the non-farm payroll. And also, what people don't know is non-farm payroll and unemployment rates come together and average hourly earnings Look at these three news together. That's why the impact is so much. So it's not just about NFP. Y'all should leave. NFP is tired of people suffocating it and blaming it on their blown accounts. Like, okay, so then he also had this low-key guy here where the federal budget balance. Trust me, this low impact news also, in a way, they all contribute to all that decision. So if you really want to study fundamentals and how the economy works, you have to pay attention. I'm just teaching you what you need to know to kickstart your research. Okay, so does that make sense, guys?
Yes, ma.
Okay, so we have 3 minutes. You know, the chart has been the chart in this past few weeks. Amazing. Still doing well. We'll see what Monday brings. You know, ultimately, we just want to see what price does after. It was a huge push after NFP. Yeah, and then basically we'll just watch. Y'all know how to mark up your charts, so go ahead and prosper. Yeah. So good night, guys. That will be all. Does anybody have any questions? We have 2 minutes.
Ma, the past videos that you've been doing, are they on YouTube?
What?
The videos that you've done on fundamentals
Mm.
in the previous, are they on YouTube?
Yes, one is there. The beginning is there, so you should definitely watch it. I'll send you the link. I'll get the link now and send it to you. So by tomorrow, this one should be there.
Okay, ma.
Mm-hmm. So I'll send you the
Yeah.
playlist. Yeah.
Okay.
All right. All right. So hi Dom. Hi
Thank you.
Jessica. You guys have a good night and may the pips be with us this week.
Yeah.
Bye.